Hi, everybody. Scott Riley at the Market Update Desk, January 22nd. Man, had an awesome weekend with the Lions winning again. I never thought I would see the day in my lifetime when the Lions won two playoff games and are headed to the divisional championships. Yeah, I'm a big sports nut, so this was a huge, huge thing to see the Lions do. Interestingly enough, the playoff game on Sunday, the Detroit Economic Group forecasted just shy of $500 million economic impact, $500 million. Absolutely wild. It's so cool to see what's going on with that and the renewal of the Lions. So let's get into what's happening this week. We got a couple crosses coming in the technical aspects. Let's talk about what that means. So last week we got a pullback in the market because we didn't have a ton of data, but there was a whole lot of commentary from Fed members and from the Davos Economic Forum last week. So that kind of led the way last week. Didn't get a lot of traction in the positive range. We have started off in the positive range this morning. On the technical aspects, there's a couple of very, very cool things that are going on right now. There's been the confirmation of a golden cross for mortgage-backed securities. That's when a shorter-term moving average crosses over a longer-term moving average. So the most influential golden cross is when the 50-day moving average crosses over the 200-day moving average. And that's exactly what we got towards the end of last week for mortgage-backed securities. Now, keep in mind, we don't immediately see a betterment to mortgage rates or mortgage-backed securities, but it gives the foreshadowing of where we're going to go. So it's great news. Now, that in conjunction with a death cross. So what am I talking about there? So the 10-year bond, the death cross is where the 50-day moving average crosses below the 200-day moving average, which portends to lower yields, meaning better mortgage rates. Now, going on this week, with the important information for data, meaning the personal consumption expenditure, PCE, coming out this week, we should be heading towards positive in the markets and get better pricing by week's end. Man, that's great news because we took a little bit on the chin last week. Now, the big 90-pound gorilla coming out this week is PCE on Friday. Now, the market's expecting somewhere between 0.2 and 0.27% on headline PCE, which would cause the year-over-year reading to either be flat or slightly decreased to 2.6 or 2.7%. The more important focus, though, is on the core, which strips out volatile food and energy and is the main focus of the Fed. The market is expecting core to rise by 0.2% to 0.25, and for year-over-year reading to decline from 3.2 to 3%, almost a two-handle on core CPI. Be big welcome news in the bond market. Also coming out Thursday is Q4 GDP, the first initial reading, and durable goods orders, along with jobless claims and new home sales. Now, for Q4 GDP, might get a little bit of a hiccup there. I posted yesterday about all of the buy now, pay later loans that are coming due. A lot of people use those to supplement Christmas spending. So we may get a little bit of a bump in the road, which could very well be worked out in the coming months. So we're going to watch that pretty closely on Thursday. So with all this stuff going on, the Golden Cross, the Death Cross, PCE coming out, Q4 GDP first reading, durable goods, I think by the end of the week, we're going to be in a really cool spot. So buyers, if you haven't been out looking, you need to be out looking now. Take advantage of the snow that's out there. Let the market work for you versus against you with competition. Give us a call. We're happy to go through all this information, help get you pre-approved, help get your offers accepted by speaking with both your agent and the seller's agent, and let our knowledge and experience go to work for you. So I think we're on the start to lower sooner again. Give us a call, 616-293-2189. We'll be happy to help you out. Have a great week.